Hello, everybody, and welcome back, whether you're just joining us or continuing the conversation. So far, we've talked about how to identify the right cooling technologies and how to design, procure, and operate cold rooms that are both technically sound and financially viable. My name is Dimitris Karamitsos, and I work for the Basel Agency for Sustainable Energy, and I'll be your moderator for this session, where we will be diving into the next big question, which is how do we finance and scale these solutions sustainably? What is of interest to investors engaging with such solutions? And what do they pay attention to? What are the KPIs that they track? How do they select their respective markets? So a quick parenthesis, we also have a parallel session taking place on estimating greenhouse gas emissions using life cycle assessment. So if you'd like to join the discussion, just scroll down to the links section of this page and click on the session titled Session 5. It will take you exactly there. So first, some room guidance. I highly recommend and encourage all of the attendees to write any questions that come to your mind to the chat box that is on the right. So the more questions you ask, the more we will be able to support you and understand your challenges. So you remember, really, there are no questions that are bad questions. So without further ado, I'd like to start inviting our distinguished panel on stage so that they can introduce themselves. So first, I'll start with Satish Dhanapal.
Hi, Dimitris.
Introduce yourself.
Hello, everyone. First of all, thank you, Dimitris and Base, for giving us an opportunity to present our insights here. Hello, everyone. I'm Satish Dhanapal. I'm part of ResponsAbility, which is a Swiss-based impact investor. I'm heading a global team of climate specialists within ResponsAbility. I've been with ResponsAbility for close to 9 years, and I've been working in the climate sector for 18 years. Happy to be here.
Many thanks, Satish. Next, Jonathan.
Hi there, everyone. It's lovely to be here. My name's Jonathan Clues. I am a senior manager at the Carbon Trust, and I help to lead our sustainable development practice. My role primarily focuses on how we can improve the pipeline of scalable businesses across the productive use and energy access space up towards them being investable and scalable and growing in strong ways. But lovely to be here. Looking forward to the discussion.
Many thanks, Jonathan. Next, could we bring on stage both Ryan and Tushar?
Hey, good morning, everyone. Thank you again for having us. My name is Ryan Pierce, and at Bloomberg Philanthropies, I lead our solution spreading efforts in the public sector, including a program called the Bloomberg Cities Idea Exchange that has close to 900 member cities around the world. And I'm joined by Tushar.
Thanks, Ryan. Good morning, everyone. Thank you for having us. My name is Tushar Vohra, and I work with Delivery Associates. We are an international development advisory firm, and we partner with Bloomberg Philanthropies and Ryan here on several of their projects, including the Bloomberg Philanthropies Global Mayors Challenge and the Bloomberg Cities Idea Exchange that Ryan leads. So from Delivery Associates, I've had the privilege of leading our work on the Rourkela cold rooms that we will be covering today, a model that's now demonstrating how community-led cold storage can actually transform farmer livelihoods. Pleasure to be here, and thank you for having me.
Many thanks for both of you for being here. Last but not least, I'd like to bring on stage Matthias Schicki from Partners Group. Matthias, over to you.
Yes. Hello, everyone. My name is Matthias. I've been with Partners Group for 8 years, which is a global private markets investor. Within Partners Group, I lead our climate change strategy and implementation, and also am the global head of our charity, PG Impact, which is one of the investors in Koolboks. And I'm very excited to be here with you and share my insights on the investment and our view on that topic.
Great. Many thanks, Matthias. So thanks, everyone. We have really a packed session. So I'll directly hand over to Satish, who will present how ResponsAbility engages with strategic investments in the sector. Over to you, Satish.
Thank you, Dimitris. Can I have the slides? Yeah, great. So before we deep dive into how we look at cold chain investments from our perspective, I'd like to also give a quick intro of responsibility. As I mentioned earlier, so we are a Swiss-based impact investor. We are a 20 plus year old company operating across the emerging markets, and we have close to 280 employees and around 6 offices. And we have invested across 70 countries across the emerging markets, and we manage close to 5.5 billion of investments. And this we do across 4 themes. We work in climate finance, which is financing companies or financial institutions and promoting climate-related investments. And then we also focus on financial inclusion, supporting microfinance institutions across emerging markets, and also enhancing and strengthening SMEs access to capital. And we also invest in sustainable food across the food value chain, in enhancing their efficiency of the sustainable food value chain. And we also have a fund-of-fund investments. We are a global organization. Most of our team are spread across the regions where we invest. Our biggest team spread across Asia, and we also have offices in Africa and also in Latin America. So coming to cold chain investment, so this is one of the from our perspective, cold chains are highly impactful. Since we are an impact investor, for us definitely it fits our investment objective. And for me personally, I was really amazed by cold chain infrastructure when I visited a potato cold storage 15-16 years back. I went there to evaluate their effectiveness of these cold storage from an energy perspective. I was amazed by the impact these cold chains are creating, especially when it comes to this potato cold storage. They are a staple food for these people, and they store this potato throughout the year. And this is addressing a key issue of food security, right? So it has a big impact narrative. But what I realized after that visit and after looking at those cold storage is that while this is addressing a bigger challenge, but there are also other issues which are also coming up globally. Like for example, there are a lot of significant amount of food is being wasted post harvest, and there this cold chain technology could address those issues by improving the post harvest food loss. So food loss is a bigger concern, not just from a farmer loss perspective, but also from an overall climate perspective, climate change perspective. Food loss is a key contributor, because more food loss, it adds to more CO2 emissions. Also, you have to produce equivalent amount of food, and adding to more emissions. So from that perspective, cold chain is definitely an important investment sector for us. And when we evaluate an investment from our lens, so we look at 4 quadrants before we invest in those companies. So first is the commercial viability. So this is key. While we are an impact investor, we also have, for us, impact and return both go hand in hand. And the commercial viability of the business is very critical. And here we start with looking at the market. Is there a market demand for cold chain solutions? And what is driving the market demand? Is it driven more by government policies and regulations, or is it driven more by business ventures? For example, in India, the cold chain investments are now critically driven by quick commerce and mid-commerce businesses. So we look at the market drivers which are creating demand for cold chain, and we also evaluate whether these business models are scalable and whether they can adapt to the increasing market demands. And the critical aspect is, while each company will be at a different stage of their growth, I think it's important to have a positive unit economics for the solution. It could be a technology company promoting cold chain, or it could be a aggregator integrating multiple cold chains, or it could be a solution company providing cold chain as a service to different users. It's important to have a positive unit economics, and we also prefer the companies having a strong partnership, because that is critical for their utilization. Having a partnerships, it could be for a partnership with a logistic company, or it could be partnership with an FPOs when it comes to farmer organizations. So it's important to also look at partnerships, which is very critical for scaling their products and solutions. And then the track record. While we are not an early stage venture investor, we look at providing growth capital. So we prefer companies having a decent track record of demonstrating, providing solutions to users, and then in terms of payment collections, in terms of managing fundraising and growing the business. So it is important to have a track record before we invest in those companies. And yeah, this is critical because we are an impact investor, and impact is critical. Every investment should have an impact angle, and we will evaluate each and every investment, their impact potential, and how our investment could create that impact for the users. So from a cold chain perspective, we see, as I mentioned, the post-harvest food loss is a bigger challenge, and cold chains can address this post-harvest food loss, and improving the livelihood of farmers, because they can store food and they can sell at a better price, and their loss could be minimized, so their better livelihood could be improved. And overall, there is a reduction in GHG emissions also linked to this cold chain investments. So and while different solution will have a different impact angle, so we look at each and every investment and evaluate the impact potential, and this is very key for our investment evaluation. And then the next element is technology and climate resilience. I'll talk about technology because the whole core of the whole solution is linked to technology, right? So the technology should be able to deliver the solution to the user. So we evaluate whether the technology is mature and has been used in the market. That's part of a standard assessment. But we also start looking at whether there is a digital integration in the technology, because most of the time the risks are coming from a technology perspective. The risks are coming from operation maintenance and not able to address issues arising during the operation maintenance, and then the increased downtime. So it is important to have an integration of digital infrastructure like IoT analytics, so that you can address issues proactively. So we also look at whether those solutions, cold chain solutions, have a digital integration. And then we look at energy efficiency. Energy efficiency is no more a promotion by government organization. It is a must for businesses, because with the rising electricity cost, it is important to have an energy efficient cold chain so that you can adapt to the increasing electricity cost and operate sustainably. And then the last part, which I mentioned here, is climate resilience, which is currently there are not much of focus, but there is an increased focus on this topic, climate resilience, because climate change, we already started facing the impact of climate change in our day-to-day life. It could be due to increase in temperature, increased precipitation in some areas, leading to flooding, increased water stress, and these. And typically, most of the companies look at historical climate events and then they design their solutions. But it's important to also look at future climate events. There are climate models available, so it is important to assess the future climate impact and evaluate the physical disruption due to the climate risk for the cold chain assets. And this is important to integrate. It could be a flood event, or it could be also be an increasing temperature, which could impact increasing operating cost for cold chain operations. So technology and climate resilience is critical, and we will evaluate investments from this angle as well. And then the last quadrant, which is governance and risk, which is also one of the core of our evaluation. And governance as a topic is also evolving fast, especially with emerging companies. So we prefer companies having a strong management team who are able to deliver solutions and also able to manage fundraising and on time. This is very critical for sustainably running a business. And from a risk management perspective, we also look at what quality of investors who are there in their cap table, because that also provides an indication on their ability to integrate governance into their business operations. And the last point is on ESG integration. This is from a risk management perspective and from an environmental social governance perspective, how you can manage risk. It could be related to your workplace safety, occupational health and safety of your workers, having a clear policies and frameworks, communicating these frameworks, having a grievance mechanism, addressing the grievances. So it is important to integrate environmental social risk management into your business operations, and that is critical. And we will be looking at this as well as a important aspect while evaluating the investments. So all these four are important. So these are not in order. All four elements are important while we evaluate an investment. And we also understand not every company will be perfect when we are evaluating. There will be gaps, and especially when you look at investments in emerging markets. So we also prefer working with companies who have a strong management commitment who are keen to improve their operations, and we are also happy to support those companies in enhancing their operations and bridging the gaps. And we have done in the past also working with companies in enhancing their environmental, social management practices and helping them evaluate climate risk assessment of their assets to integrate climate resilient design into their operations. So from overall, we prefer working with a strong management team who are keen to improve their operations and integrating all these elements into their business operations. So that's it from my side. Over to you, Dimitris.
Many thanks, Satish, and we'll have the time to delve into some questions, hopefully at the end of the session. So thanks for those interesting insights. And next, I'd like to hand over to Jonathan, who will be sharing how the Carbon Trust can actually support companies to get investment ready. So Jonathan, over to you. Thank you.
Perfect. Thanks, Dimitris. I think a perfect link there, and exactly what I was going to say. Fascinating to hear from Satish and how an organisation like ResponsAbility looks at the sort of potential investments they're going to make. And that's really what I want to talk about from the Carbon Trust role, is how do we ensure that those gaps that Satish mentions are as few as possible, so that we can get as many companies as we can investment ready and sort of scaling and growing. So just before I get into that, just very quickly on the Carbon Trust. The Carbon Trust is a large organisation for about 400 people now. We are a not-for-dividend consultancy that's mission is to accelerate decarbonisation across the globe. We work in a variety of sectors and with a variety of stakeholders, including governments to help them set climate policy, corporates to create decarbonisation pathways or conduct footprinting, and then also the core area where I work in terms of designing and managing large programs across various different sectors. And as mentioned before, I work in our sustainable development practice, which is looking at energy access and distribution of renewable energy across sub-Saharan Africa, South and Southeast Asia, and also the Pacific as well. So just in terms of what some of the things the Carbon Trust does, we run and partner on a range of sort of large programs. Some of the core ones that I'll just mention very briefly here: the Transforming Energy Access platform, which is FCDO's, the UK government's flagship energy access program that we've managed and run for about the last, I want to say, 7 years now. Commitments of around £186 million so far. PRIO, which is Powering Renewable Energy Opportunities. This is our grant and technical assistance facility, which is up to its, I think, 5th or 6th window now, which is supporting productive use companies to test business models and hopefully demonstrate their ability to scale. And ZGen as well, which is Zero Emissions Generators, which is looking to accelerate the displacement of fossil fuel generators across the global south. Actually, what I would mention as well is, you'll be hearing a bit more on them later, I hear, PRIO, one of the previous grantees was KoolBoks, as well as having supported organisations like KoelFresh, which are seeing great success in the clean cooling space so far. Across that, we also partner with various other organisations like LAIR and Efficiency for Access for their R&D fund, which is focused on technology development and improvements, and innovation, and the Innovation Fund, which is run by Sustainable Energy for All, which is looking at powering healthcare, and included within that is the cold chain for healthcare. The final one that I would just mention is the T Venture Facility. So this is a new pilot program that we created, which is looking to deploy grants and technical assistance in a different way to how donors traditionally do it. Grants and TA tend to be much more project focused. We're looking at seeing how we can deploy grants in a much more commercially minded way to help companies to scale, rather than supporting projects, to de-risk early stage investments and get more companies investment ready. But that'll be something I talk about in a bit more detail in the next few slides. So what the Carbon Trust is aiming to do is create an ecosystem of support mechanisms for productive use companies. How do we get companies from the left-hand side of this slide, that sort of market analysis, developing their technology, developing their business model, through to the scale and sustained growth that they would require to actually have greater impact in the sector, regardless of the sectoral value chain that they are working in? How do we get them ready for organizations like ResponsAbility to be able to make an investment in them. And on the left-hand side, we do a lot of work providing grants and technical assistance to ensure that the technologies are fit for purpose, ensure that business models are right and have the ability to scale. And we have partnerships on the right-hand side with organizations like Acumen and Shell Foundation, and we also support and fund CrowdPower, which is a crowdfunding initiative, to ensure that they're able to access commercial or semi-commercial capital to be able to scale and grow. But what we do know is that there is a challenge in the middle where a lot of the companies coming out of these grant programs are often not necessarily seen as being investment ready by the early stage investors, the impact investors that we have in the sector. So what can we do more to help close that gap to ensure that more of these early stage companies are becoming investment ready, are able to have a significant impact in the space? And so designing programs and providing support in such a way that fits that. And it's incredibly important for us to be partnering with investors and with these organizations that are coming in at a much later stage, or just even a small bit later stage down the capital continuum, to ensure that they are lined up with the existing programs and that we have got this smooth conveyor belt and pipeline of companies that are able to scale and grow. In terms then of what programs we have that sort of support early stage companies, we want companies to be able to demonstrate innovation. We want them to be able to demonstrate that they can scale, and we want ones that are going to have a large amount of potential impact. And so within that, the exact selection criteria we have for companies will vary based on the program and based on what the objectives of that program are. And I'll come on to a little bit more of the specifics of that. However, we do see commonalities between the companies that we typically aim to support across all of our programs. The first is really being impact focused. This is a highly impact orientated area where the potential to both have commercial returns but also have strong impact on the customers, on the end users, on the markets that you're working in is real and it is there. So where companies can demonstrate that they've got strong improvements to livelihoods for the end consumers, that they're able to demonstrate strong job creation potential, those are the areas that we are looking at. Those are the types of companies that we're looking to support. So what is your impact thesis? How are you driving and delivering that forwards? The second area is really around equitability. So are you able to demonstrate that you are a company that is considering gender aspects, is considering localization, is even considering now increasingly things around disability inclusion, ensuring that companies are focused on these areas, again, drives further impact. And studies have now shown that companies that are more focused on these areas tend to drive towards greater revenue generation and greater profitability. So this shouldn't be an afterthought. This shouldn't be an add-on. This should be built into what you are doing because it can have significant improvements to your business model, and your operations moving forwards. Third, we talk about collaboration. So we know that the scale of the challenge here is immense. There isn't going to be one organization that comes in and solves the challenge of cold chain in any given sector. It's going to be a multi-company approach. So this isn't a case of a winner take all. We know that companies that we support are going to have fantastic learnings for the sector. They may go towards companies that are in adjacent sectors. So this might be companies working in the agri space that are supporting the findings and growth can support companies working in the healthcare and the vaccine sort of cooling space. But what are you able to create in terms of the evidence base and the knowledge of the sector that is going to help the entire sector grow? Because if we don't support the entire sector to flourish, then no individual company is going to succeed regardless. So how can we build in the research findings and the work that you are doing to ensure that that knowledge is spread out across the sector accordingly? And the final area, and probably, arguably the most important one, but we definitely do see all of these as being vitally important, is routes to scale. what is the understanding of that company's pathway to scale and growth? If we don't have a good sense of that, then that company is likely not to be one that we see as having the opportunity to move up that journey and to attract later stage investments. And understanding what scale looks like for that company is vitally important. They need to know, is that something that is right for them, or is it not? And then across that, we have various different variations in terms of some of our programs are supporting technologies, others are supporting business model development, some are open calls, closed calls. Really, the KPIs that we look at are going to vary by program to program to ensure that we are attracting and filling in the right gaps. Just finally, the last slide, in terms of the support we offer, firstly, we do a needs assessment. Onboard a company, understand what their strengths are, their weaknesses, and prioritize the support that they require. Develop targeted technical assistance on that to help close that gap so that they're able to move up that capital continuum. There's communications and dissemination support, marketing. How do you get your name out there as a strong and high potential company in the space? And then across the T program, we also have something which is called the support services, which is effectively internal programs, often delivered one-to-many in terms of their approach, really focused in on things around JEDC issues, health and safety, which is increasingly important, and then also huge access to a networks of partners. We have over 1,000 organizations that we've supported across the T program. Those organizations, we're always looking to make connections across those. So overall, the support that we are offering is really looking to create that next wave of market-leading companies and ensure that they're able to move up that capital continuum. And I look forward to sort of discussing a little bit more as we go through the rest of this session.
Many thanks, Jonathan, and also super interesting to know the data that you have on what really brings a company to success and how you can transfer that knowledge to companies to accelerate their readiness. So many thanks for sharing, Jonathan. Next, I would like to hand it over to Ryan and Tushar, who will share a specific project actually they've invested in within the cold chain in India and why it has been so successful. Over to you, Tushar and Ryan. Thank you.
Amazing. Thank you, Demetrius, and good morning again, everyone. As I mentioned at the top, my name is Ryan Pierce, and at Bloomberg Philanthropies, I lead our public sector solution spreading efforts, which I often say means that it's my job to find some of the most impactful city-led solutions and honestly to make it easier for cities around the world to adopt them, which is why I'm so excited to share more about a project, as Dimitri mentioned, from Rourkela in India. A project that we know is meaningfully boosting farmer income, preventing post-harvest losses, and creating economic opportunity for community members. And I think it's particularly important in the context of today's conversation because we think there are three key ingredients to this project, including the role of government, real meaningful community operation, and the need for capacity building to make these projects sustainable. But first, I wanted to explain a little bit about how we at Bloomberg Philanthropies began supporting this cold storage solution. As you may know, our founder and funder is Mike Bloomberg, a business leader who founded Bloomberg LP, a data and media company that now has something like 26,000 employees across 100 cities in the world, and who happens to also be a three-term mayor of New York City. And when Mike left office, he created Bloomberg Philanthropies to encompass all of his personal, corporate, and philanthropic giving, all in service of the mission that he has charged us with, which is achieving better, longer lives for the greatest number of people. And because Mike was a mayor, he also knows the unique challenges and opportunities that cities face. Today, more than half of the world's population lives in cities, and by 2050, more than 2/3 will. And so if we want to be really serious about better, longer lives, and I think everyone here today in part has that as part of their work, we believe that cities need to be part of the solution, which is why he created a whole pillar of the philanthropies to invest in cities, their leaders, the capabilities of their employees, and notably for today, the ideas that they create and borrow. And you can see on this slide some of that work. As Tushar mentioned in the intro earlier, one of those programs is called the Mayor's Challenge. It's, in a sense, an innovation competition that invites city leaders around the world to identify a pressing challenge and to create a novel, innovative solution to make progress on that issue. We then, over the course of 2 to 3 years, with coaching and peer learning, help those cities bring to life their project. And one of the winning cities was this relatively small city in Rourkela in eastern India, who in 2021 was one of just 15 cities that we awarded with $1 million in grant funding and technical support to implement their idea. And Rourkela's leaders had identified post-harvest spoilage as a key issue harming farmer incomes locally. But we invested in the project because they understood that infrastructure alone wouldn't solve it. A note that I heard Pablo at the end of last session mention. They also knew that cold rooms were a common sight. The infrastructure was there, but they were defunct. They would operate for a little while. They would face some mechanical issue or dips in usage, find that farmers weren't using them. The deeper challenge wasn't the availability of the infrastructure, it was the lack of trained, trustworthy cold room operators who could sustainably run the cold rooms, earning farmers' confidence and ensuring their use. So we're going to talk a little bit more about how this project came to life over the last 3 years and how we believe it's on pace to spread to more than 100 cities in India and well beyond. Tushar, do you want to join and share a little bit more about how this project came to life?
Absolutely. Thanks, Ryan. So the city identified 3 challenges in their context, and against each challenge, they adapted the model with a solution. So for each of these 3 slides, I'm going to present 2 after this. You'll see the challenge on the left-hand side and the solution that the city came up with on the right. So firstly, like Ryan just mentioned, the infrastructure-related challenges, right? So Rourkela farmers lacked access to cold rooms, and the city also had a highly unreliable power, which would make typical electricity-powered cold rooms highly risky. And of course, like we've discussed, in a couple of talks before this also, that this reflects a broader challenge we've seen across many parts of India and beyond, that cold rooms are often not located where they're needed the most. So basically, the city then identified 5 cold rooms and they installed them in strategic high footfall market locations in the city. And these cold rooms are solar powered with backup grade and thermal batteries. The second, and I would say one of the most significant challenges, was the lack of operators, and in particular of trained operators who could effectively take on the role of managing the cold room operations while building farmer trust to increase the uptake of cold rooms. And as everyone here probably knows, cold room operators need a wide range of skills to successfully run all of these operations. This is a mix of business know-how, how to keep books, marketing and farmer engagement, even the ability to troubleshoot any technical failures. So the city realized that local community groups can be leveraged and selected as operators. And they selected local women's self-help groups to operate the cold rooms. As a result, these cold rooms are not run by outsiders, they're run by locals who know the community really well, which fosters trust with farmers who are using the cold rooms and foster long-term sustainability. And in our observation, boosts livelihoods for the operators themselves, which is also a critical aspect of this model. So to build this capacity, each operator is paired with a long-term mentor who provides hands-on guidance and support directly at the cold room site, ensuring operational continuity and confidence amongst the operators who are operating the cold rooms. And finally, the third challenge, that even with successfully set up cold rooms, the city realized that due to the seasonal nature of produce, farmers and operators would both face significant dips in revenue in off-season months. In fact, this would be a huge disincentive for operators to actually take on the work of leasing and operating the cold rooms. So to offset this, the operators are also taught how to develop customized plans for revenue diversification for individual cold rooms, like market linkages and bulk supplies. So overall, this combination of infrastructure and ecosystem gave farmers what they'd never had before, just a strong control over when, how, and for how much they will sell. And in addition, it gave the operators a source of new income, pride, and leadership in their communities. The impact of the cold rooms project has been strong, and it's been externally validated. So we have 5 fully operational cold rooms right now in Rourkela, run by more than 90 women from self-help groups, reaching over 1,500 farmers. And we've seen outcomes across these 4 areas: food spoilage, which we believe is down 75%, women's income, which is up 62%. The cold room usage uptake by farmers has seen a 60% higher likelihood. And farmer income has gone up by 26%. Most importantly, I would say, before I pass it on to Ryan, is that these cold rooms are consistently used, they're trusted and valued by the community. To share a little bit more about what we learned from this experience, I'm going to pass it back to Ryan.
Awesome, thank you. And so as Tushar mentioned, this raises an interesting question. This project in Rourkela seems to have worked quite nicely. We're really proud of what the city accomplished, but we know many cold room efforts across India and beyond haven't. We think that this is for a few reasons. One, Rourkela's key insight was right. This isn't just about building cold rooms and placing them near markets. They also meaningfully invested in the people who run them. And so I like to think of the secret ingredients behind Rourkela's success to look something like this. The role of government, meaningful community operation, and local capacity building. The first local government, the Rourkela Municipal Corporation, didn't just say yes, they were at the center. They tapped into district and state funds to offset infrastructure costs. They identified the self-help groups, the community operators who would run them, and they continue to ensure long-term sustainability by monitoring progress and accountability, and by supporting the self-help groups. They're serving as a convener and a funder and a partner. And in many ways, they are shaping the market, literally and figuratively, by adapting and identifying the key gaps to fill them. Second, it's about community operation. These cold rooms really can only succeed when farmers trust the system, and trust depends on that reliable operation and local accountability. And so by, as Tushar mentioned, having the self-help groups really lead that work, the city has ensured both trust and sustainability. And we also think that a third key role is on that strong on-the-ground partner to train and support the operators. So we were thrilled that the Rourkela Municipal Corporation identified KoelFresh, which is an agri-tech social enterprise based in Rourkela, to fill the gaps in local government knowledge and train the operators. They were really the ones on the ground teaching the self-help groups, the women operators, the skills needed to manage the cold rooms truly like a business. And for us, that gets to the heart of what's needed. Infrastructure alone isn't going to transform lives, but these ecosystems do. And building that ecosystem means investing deeply in human capability and institutional capacity. So this is continuing to spread and scale. We're now reaching something like 80% of the rural municipalities in Odisha. There are 40 cities totally that are now working to implement this project across the state, and we see a path to add another 60 over the next year or so. And so excited to continue spreading this work and partnering with like-minded organizations to bring this to life. Thanks all.
Many thanks, Ryan and Tushar. We can really see here the importance as well of an ecosystem on the ground, and how entrepreneurs need to use the availability and the knowledge of other entities to support them in reaching their outcomes. So congrats on the work done on the ground, and many thanks for sharing this example. Next, I'll like to hand over to Matthias from Partners Group, who will share an example where they've invested in a young startup in the cold chain space, and what were some of the metrics they were looking into. Many thanks, Matthias. Over to you.
Yeah, thanks a lot, Dimitris. So yeah, welcome again also from my end. So so I work for Partners Group, as mentioned, where I am also the global head of our charity. And before I jump into Koolboks and share few insights into that transaction and why this was interesting for us as a charity to conduct this impact investment, a few things on PG Impact. So PG Impact is a charity that is employee-run and was established in 2006. And our purpose is to support organizations and causes that create meaningful, measurable societal and environmental benefits. And that's pretty broad, you might think, but also if you look at the grants we've supported, organizations we've supported over the years, we are very broad in impact that we want to support. And how do we support? It's mainly through two pillars. On the one hand, it's really financial support, so making grants, making impact investments, but also emergency assistance in cases of, for example, earthquakes. And the second pillar is PG Gives Back, which is personal time that colleagues give to local communities. So that is spending, for example, a day or two with in an elderly home, or doing like a river cleanup, or really volunteering with local communities. So that's already it from the, let's say, the PG Impact introduction. So now let's speak a bit more about Koolboks and our investment in Koolboks. So Koolboks, to the extent you don't know the organization, it's a Nigerian startup that provides off-grid, solar off-grid refrigeration solutions. So these are cooling as a service solutions. And with this business model, they are accessing underserved populations and really try to deliver high impact there. And we looked at a couple of opportunities in this cooling chain space. And Satish actually mentioned a couple of things that we're also looking for in investments. So I'm glad that we're also looking at similar metrics. So that's good. But what's key for us is, on the one hand, really the reduction of CO2 emissions. And in this case, it's like replacing diesel generators for the refrigeration systems, but also, which is key, and Satish mentioned that also before, is like the food longevity, like enabling or reducing food loss across the value chain. What we also found very interesting about Koolboks is the economic and the social benefits it provides. So obviously for an impact investment, it can't only be the impact that counts, but it really also has to be underpinned by a business model that makes sense. And here, what we thought was very interesting about this cooling as a service model is that it overcomes barriers like, for example, high upfront costs that users typically face. Typically, users of off-grid refrigeration systems, they lack the skills to maintain those systems. And there are limited financing options in underserved populations or rural communities. And Koolboks addressed many of those points. What was also very interesting for us is really the market opportunity itself, because we saw that Koolboks already was working with a couple of solar distributors and already had some repeat clients. So for us, that really proved also that there is market traction, and also this growth potential. If you just look at sub-Saharan Africa, then there's only about 17% refrigeration penetration. If you compare this obviously to developed markets like EU, the US, there's a stark difference there. Here, everyone has a refrigerator in the home. And yes, so this really presented a big investment opportunity in our view as well. And then finally, in terms of market opportunity, this strategic positioning of Koolboks was for us quite compelling, that they are already working with solar distributors, that they're leveraging this the existing off-grid solar value chain, and that they're integrating into this operational setup. So they're not fully vertically integrating and developing everything there on their own, but focusing on certain aspects of the value chain, and with that also being able to successfully implement their cooling as a service solution. Well, with every market opportunity, there are key risks. Here are some of the key risks that I'm also happy to share with you, that I can also share with you. So if, as a European investor or European charity, you invest in Nigeria, then typically this comes with FX risk, so with foreign exchange risk and inflation risk. And in particular, in this case, the investment was made in euros. And what we then did as a mitigation factor is we included a higher annual depreciation in the Nigerian naira revenues in our base case modeling. So basically what we assumed is that there will be less revenues, or the value of the revenues generated compared to the euro investment we made will be lower. So that's how we approach that. And still in that case, with this depreciation factor, it was, at least in our view, a profitable business case. And the second key thing, which is a point that we look at across all impact investments that we make, I would also say this is not only about impact investments, but also just grants we make. We very closely look at the management team, and to the extent you have experience with investments on your own, or just working with young companies, in the end, it's the management team or the team that you invest in, because there will be pivots, there will be situations that have to be overcome. And so in this case, it was a very young management team with limited track record. And then also scaling this new cooling as a service model in Nigeria that was just not available before, meant that operationally you also need to have some experience on how to implement this. And the way we look at this, or how we were comfortable that we could, or the team could accomplish this, is that they were also partnering with experienced investors. And Arua, amongst others, in our view, gave us a lot of experience, gave us a lot of comfort, because they're an experienced investor and they were the lead investor in this transaction. So as part of their investment, and at the time, this was like I think 1.6 or 1.7 million investment rounds. Arua also put together like a compelling value creation plan, and this really convinced us to also back this opportunity. They also developed together with the team of KoolBoks like a clear trajectory on who they're gonna hire next, and that also gave us like a lot of comfort. And so with that we were able to convince our investment committees, and we were very happy to make this investment. KoolBoks just this year raised another round. So as just mentioned, the first round where we invested, it was 1.7 million. The last round they raised was $11 million earlier this year. And I think that is like the perfect case for us. One, providing like the capital to get them going. And the second is then to see that they are really able to attract more capital. And with that, I like to close my presentation. Obviously here for additional questions, but thank you very much for listening.
Many thanks, Matthias, and super interesting to hear that success story of KoolBoks. Quick question: when was it that you had deployed the first capital with KoolBoks?
So we invested in January 2022.
2022. Great. So the audience sees a little bit as well the time span it takes. It's not kind of like book standard, but so they closed, I think, the Series A this year. So it's kind of like a growth of 3 years where you need to do the grind and to grow a company on the ground. I'll follow quickly with one question for you, Matthias, since we have the time, and then we'll jump onto the Q&A session with everybody. My first question is, what is the value that PG Impact can bring in an investment with a company?
Yeah, thanks a lot. And I think that's a very important one to address. Now, PG Impact as a charity has a clear focus on impact. And we see our impact as an organization that provides like catalytic funding. And what I mean with that is that it's like an investment in Koolboks where they are raising 1.7 million and we're making our contribution to that, where many other investors, even impact investors that have institutional clients, simply cannot invest because of the high transaction costs. If I would look at the transaction costs involved, then this would have made no sense, to be blunt. This only makes sense because we focus on the investment amount only and the return we're getting on that investment amount. We're not looking at all the transaction costs like investment committee meetings, due diligence, and all of that we included. But this catalytic impact investment is crucial to get some of these organizations going. And for example, PG Impact, with the backing of Partners Group, which is a global private markets investor managing around 180 billion US dollars globally, I would say our name does carry some weight. And if they can use it to then attract more investors, it's perfect. And that's mission achieved in our view. But yeah, it's really this catalytic impact, preparing them for the next round, and then attracting bigger rounds afterwards.
Super, many thanks, Matthias. If I may call all of the panel on board, we have a couple of minutes for Q&As, which is great. I'll take the first question I have here, which is for you, Satish. There was a question which was raising, what is critical for ResponsAbility in order to move forward with an investment? So more clarity on this is, what is the revenue, for example, or margin thresholds, which, for example, would make cold chain investments truly attractive for ResponsAbility?
Sure. No, thanks, Demetrius, for this question. Maybe I just add by setting some context before I respond to the question, right? So we are not an early stage venture investor. So we come in the middle part. So we are a growth capital provider, predominantly a credit we provide to companies. So for us, what is important is what I mentioned in my presentation, the 4 pillars. So we look at critically before we invest in those companies. But the core of those 4 pillars is the management team and the unit economics. So impact is something we look at the beginning. We screen the investments, and that has to pass through our impact evaluation before we even look at the companies. But after we look at that impact angle, for us, the key is to look at the management team and their capacity, their track record, and their ability to raise capital and on time. That is very key for growth of the company. And then having a product with a good unit economics. So this is very key for us. And then also for us, since I mentioned we are not an early stage company, so we work across multiple ecosystem companies, like right from technology providers. So we can also provide working capital financing for those companies to scale and sell more of technology to the market. We can also work with solution providers, and we can also work with aggregators. So it's important to understand how their solutions are designed to the market demand, and that's key. And for us, it's important to look at an integrated approach, especially in cold chain. We have looked at few investments, and we also invested in few cold chain related activities. For us, the integrated approach is key. To give an example, a fruit value chain company who are into export of fruit, they providing cold chain solutions to their upstream farmers and upstream network, producer network. It makes a good business case because there is an assured utilization and there is an assured product use. Same, for example, a potato export company promoting cold storage for their upstream farmers, more on the modular cold storage. So this way, the risk of having a lower utilization and then not used the cold storage not getting used is also getting minimized. And so we prefer to have an integrated cold chain approach.
Super, many thanks, Satish. Then I see there is a follow-up question for Ryan and Tushar, which is regarding the Urban Cold Chain Initiative led by Bloomberg. Who were your main counterparts? Is it the investments? Was it made private or public? Either Tushar or Ryan, whoever you want to take.
Yeah. Dimitris, could you come again with the question once?
Absolutely. So the question was, who are your main counterparts in the project? Was the investment private or public?
Yes. So the main counterparts, like I would say, like firstly, like we described, is the Rourkela Municipal Corporation, right? So they were the ones who won the Bloomberg Mayor's Challenge, and through that they were provided the initial grant through Bloomberg. In parallel, Bloomberg also had KoelFresh, who provided all of the implementation support to the Rourkela Municipal Corporation during its entire technical assistance period for around 3 years. And now KoelFresh is also supporting that scale up across different parts of Odisha, like Ryan had described. So this was a grant made by Bloomberg Philanthropies to the city. And now the way this is going to work as we scale up is that all of the cities that we are working with and the government that we are working with would take care of the capital costs of all of the cold rooms, which is through multiple government schemes that are currently ongoing, both at the central and the state level. And Bloomberg would continue to provide technical assistance in order to build that strong ecosystem across these cities. And they would continue working with KoelFresh in order to do that.
Great, many thanks, Tushar. I'll jump onto, I know that time is quite limited, but let's take a couple of more questions. Over to you, Jonathan. I was wondering, what could we do in addition to close the gap between investors and early stage companies?
Yeah, thanks for that. And I guess maybe let's start with an example for that. So the last round of PRIO had 732 applications from productive use companies, 85 of which were cooling companies. So the pipeline is not the problem. The quality of the pipeline, the quality of those early stage companies is where we really need to be working and improving. And through some of the research I was doing over the last year, talking to investors and talking to a lot of these grant programs across the sector, not just ones Carbon Trust runs, they both have a very different idea of what investment ready means. Early stage investors tend not to believe that what the open calls and the grant programs and tech accelerators are doing actually gets those businesses to the point where they are investment ready, whereas those programs believe that they are getting those companies to the point. So there is a mismatch in terms of communication here. So we need to hear more from investors in terms of exactly what it is they need these early stage companies to see, and then we need to alter and adapt the way that we're delivering that financial assistance, the way that we're delivering that technical assistance in such a way that it actually helps to fill that gaps and get companies to the point where investors sort of see that see the potential of those businesses. And that could be particularly in areas that we've heard mentioned a lot today around unit economics. That's something that consistently comes up that companies don't really understand, the financial side of things. But really as well, it's about how are you using capital? Are you using the right capital for the right means? Do you have a business model and you understand how it scales? And do you have the right team in place? And so if we're able to adapt the types of support that we've got to answer those sorts of questions for companies, we'll hopefully start to close that gap between early stage investors and those early stage companies.
Many thanks, Jonathan. And I'll wrap up with two questions. The first one is for Tushar and Ryan, is what metrics do you request companies to report on, and which KPIs define success for you?
Ryan, would you like me to?
Yeah, happy to. I mean, I'll share at a high level, and then Tushar can go a little deeper. So I think for us, a few KPIs that we really look for. One is around utilization rates. and the extent to which the cold rooms are being operated. And that ranges everything from how much produce is being stored, what the turnover rates are, the levels of income that are the amount of revenue that's going into the system. And then if we zoom out at the like highest level, for us, the mission isn't just to have a single cold room operational. The thing that we're really looking for at the system level is what is the adoption rate for this model at the state and then ultimately federal level. Like for us, the real win here is around the model spreading because we know that it works. Tushar, you can share a little bit more about the individual projects and how we monitor success.
Yes, absolutely. And Ryan, just like Ryan spoke about the different levels, I think we have these different levels as operational outputs, medium-term outcomes, and of course, long-term impact. So at the operational level, we would look at things like Ryan said, like the cold room utilization rates. Are they really being used or not? The number of farmers and vendors that are actually actively using these facilities. So these metrics tell us whether, the system is functioning effectively, if the cold rooms are being used as intended, or if our outreach and training are translating into adoption. And then at the impact level, of course, we focus on what ultimately matters, which is increasing farmer and operator income and reductions in post-harvest losses. So these metrics, they define success for us because they show us whether the intervention is actually improving livelihoods and creating tangible economic value in the city, which is ultimately Bloomberg's goal with cities. So, we also try to pair like some of these internal data systems that we have with an independent evaluation conducted by a research partner that we did for the Global Maize Challenge as well. And finally, I would say, like at the end of the day, like Ryan said, the idea is to really scale this model. So now we're taking what we had in Rourkela and how we measure in Rourkela and thinking very critically about how we can use these indicators at scale for the entire state of Odisha, which we are now formally working with following a recent MOU with the Department of Horticulture.
Super, many thanks. And then I'll take one last question that I invite each one of you to answer in a couple of seconds is how do you see the market this year and moving forward in access to finance? So for the companies that are connected today, so how positive are you, or what's your thought on this? Maybe Matthias, you start.
Well, I'm super positive about it. We have seen the success with Koolboks. Obviously, there's no exit there yet. They're still in scale up, but I think the future is very promising, right? What we can do is we can avoid many of the mistakes we made in developed markets and jump right to the right solution. I think Koolboks is a perfect example. Off-grid solar refrigeration systems. I think it's very promising. So let's go.
Thank you, Matthias. Satish, over to you.
Yes, so we're also very positive, Dimitris. As I mentioned during my presentation, we see, especially in India, we see a lot of demand coming up from quick commerce and mid-commerce companies. So the demand for cold chain is going to increase. And with the evolution of cost-effective solutions happening around the market, we see a strong demand coming up and strong interest from investors also coming up in this segment.
Thank you, Satish. Ryan and Tushar?
I would say that we're really bullish on this. It is in part because we see a huge amount of enthusiasm from both local governments to adopt this model and increasingly state and central governments. The conversations that we're having across India are really inspiring. And I think government's willingness to invest in CapEx and then also recognizing the role of human capital and the need to develop trained operators, that's what makes this possible. And we're continuing to see a huge path to scale. So I think you said it well. Let's go. This is exciting.
I had the exact same point, Dimitris. I think the government offers such a great opportunity right now, especially in India, where they're prioritizing cold chain, empowerment for farmers, and even, like things like operators, their SHGs and FPOs, the way they're prioritizing policies for that. It's such a good opportunities for private players to really look into that and work with government to create change at scale.
Many thanks. And Jonathan, closing words.
Oh, I don't want to end it on a downer. But the one area of caution that I definitely see that we need to keep an eye on is aid budgets around the world are being cut drastically, and so the support that's available, particularly around concessional finance and early stage finance and grants, is going to be under strain. And is going to continue to be under strain for years. So how do we deploy capital more effectively, more intelligently moving forwards? How do we ensure that philanthropics, foundations, etc., help to fill that space that governments may be leaving behind from a sort of a development and aid perspective? That being said, the pipeline is already really strong. There's a lot of great companies out there, and so I think that the longer term growth pathway is still really positive. We just need to ensure that we're continuing to do more with less.
Super. Many thanks to all of you for having joined us in this morning session. So I'd like to share a few concluding words. First, many thanks again to all the panelists. And we will now be pausing for a short lunch. So please take the next hour really to refuel, recharge, and get ready for an exciting afternoon ahead. When we return, get ready for some serious, exciting sessions. So we'll be kicking things with session 6, which is all about digitalization and data from cold rooms and crops, which can help farmers unlock credit. So that's really a game changer. Then it's time for parallel sessions. We'll have session 7, which dives into implementing passive cooling solutions across Africa, while session 8, or innovation arena, will feature companies pitching brilliant solutions to investors, which is really a front row seat to the latest innovations in the agri-cooling world. Next, another set of parallel sessions will happen. Session 9 explores strengthening community ownership of cold rooms, while session 10 gives an exclusive walkthrough of the Your Virtual Cold Chain Assistant onboarding kit. Then we'll wrap up to the panel session with session 11, where we will dive into connecting farmers to markets, the models that make it possible, and what it takes to bring them to life. Then stay with us for the last session, session 12, where we will hear key highlights, learn about the direction of YoVCCA moving forward, and explore ways where we can collaborate. So really, it's a jam-packed lineup, so we hope you'll stay with us. If you'd like to stay for a few more minutes, we'll be showing a few videos about the Cultivate app, the digital tool developed under YoVCCA, which helps cooling companies, operators, and farmers track inventory and even predict shelf life. So stick around to see how it works. And if you're interested in going deeper, join session 10 in the afternoon. Many thanks, everybody.